Hi everybody, it's Peter Schiff. It's Wednesday, August 18th, 2010. Well, I wanted to start off by talking about a very stupid idea that was floated by Bill Gross, who is the manager of the world's largest bond fund, also happens to be the largest holder of mortgages guaranteed by Fannie Mae and Freddie Mac. Now, I say stupid from the perspective of the U.S. economy. It might be very smart from his perspective as an investor, but he's not floating it out as an idea to serve his own interests. He's saying that this is something that we should do for the national interest. And remember, Bill Gross was also out there very vocal when Fannie and Freddie were first failing. He was in favor of a government bailout, which of course benefited him and his investors in his fund dramatically, because without that bailout, Bill Gross and his clients would have lost a lot of money. But it would have been exactly what we needed economically for the government to get out from under the implicit guarantee of Fannie and Freddie by telling all those investors that there was no guarantee, that they need to absorb the losses instead of putting them on U.S. taxpayers. But Bill Gross was successful in lobbying Congress to push these losses on the taxpayers and insulate himself and his investors from bearing the losses that they should have made based on these foolish investments. Well, now Bill Gross is saying that the government should completely nationalize outright Fannie and Freddie, should put the U.S. taxpayer on the hook 100% for every mortgage that is guaranteed by Freddie and Fannie, which would effectively increase the national debt by trillions and trillions of dollars. And I guess they'd have to raise the debt ceiling before they can actually do this. And worse than that, Bill Gross wants Fannie and Freddie to refinance every homeowner who is current on their mortgage and to refinance them down to, I think, 4%. Now, so if they're currently paying 6% or 7%, we should let them all refinance at 4%, regardless of their employment situation, regardless of the loan to value on the house. Just refi everybody. Now, first of all, what this is going to do is a huge loss to somebody, either American taxpayers or to the holders of these mortgages. My guess is Bill Gross wants to put the loss on the taxpayer because obviously he holds a lot of these mortgages. And if he's currently collecting 6 or 7%, and now based on government edict, he's only collecting 4%, the value of these mortgages will decline dramatically. Of course, Bill Gross is focusing on the gain to the borrower from having his loan reset at 4%. What about the loss to the lender who is now collecting 5, 6, or 7%, who has to collect 4%? Maybe it's a pension fund that's going to take this hit. Maybe it's an insurance company or just an individual investor. What happens to their loss? This is not just a one person wins. It's the borrower winning at the expense of the lender. So it's not a big increase to the economy. I mean, first of all, Bill Gross is trying to say that this is going to help the economy because the consumers are going to have more money to spend because the money they're not spending on mortgage payments, they can spend on other things. Well, again, the person or the organization that was earning this income is now going to earn less income and therefore have less to spend or invest. But of course, the last thing that our economy needs is more consumer spending. We don't want to reduce people's mortgages so they go out there and buy more stuff that they can't afford. We need more savings in this economy, not more spending. But if you actually look at what Bill Gross was saying, he said that if the government got out of the mortgage market completely, which is what we need, that's the lesson we have to learn from the housing bubble, is that Fannie and Freddie were right at the heart of it because of the government guarantee. Well, what Bill Gross said is that if there is no government guarantee, his fund is not going to buy any mortgages unless the buyers put a 30% down payment and unless interest rates are several hundred basis points higher. Now, here's Bill Gross admitting that he doesn't want to loan money to somebody to buy a house unless he can get the 30% down payment. So why should Fannie and Freddie be putting the taxpayers on the hook with only 3.5% down payments when Bill Gross, who's supposedly pretty shrewd, will refuse to loan money without a 30% down payment? I mean, the reason that Bill Gross wants 30% down is because he knows that real estate is overpriced. Yet one of the reasons Bill Gross says that we need this plan is he says this plan will cause real estate prices to go up by 5 or 10%. Well, if they're already so overpriced that Bill Gross needs 30% down before he would even consider making a loan, why would he want to push them up even higher? You know, the reason that no private money is being loaned without a government guarantee is because they've learned their lesson. They don't want to make loans on overvalued property. We need to let property prices go down, not try to find more ways to artificially prop them up. And Bill Gross admits that his plan will artificially prop up prices. Now, I don't even think it'll work. I think it might slow down the decline in real estate prices because remember, these 4% mortgages only apply to people who currently have a house. So if you want to sell your house, the new buyer is probably not going to get this ridiculously low rate. I mean, they could get, I think the rate now is about 4.5% on these Fannie and Freddie loans, but it's not going to stay there. Eventually, the rates are going to go up, and so the new buyers are not going to be able to qualify for this sweetheart deal unless Bill Gross's plan is to have the government maintain artificially low mortgage rates indefinitely, no matter how high interest rates go. And, you know, of course, what we really need to do is restructure the economy and stop subsidizing housing. You know, if the government is going to keep funneling money to the housing market so that people can borrow money to buy houses, well, that is money that businesses can't borrow to expand and invest and to create jobs for the people who are living in those houses. You know, we don't have an infinite supply of savings. So if the government continues to push more money into the housing market through these subsidies, one of the things Bill Gross said is that we need, you know, this is going to help the home building industry, that we'll build more homes and this will invigorate the housing market. We don't want to build more homes. We want to build fewer homes. We need to stop building homes. We have a glut of empty homes right now. The market is trying to stop home building. Why should the government try to artificially stimulate it when it inhibits all the things that we need to be doing? We are squandering our resources building houses that people can't afford. We need to be building factories. We need to be producing products that we can export to get out of this gigantic ditch. We don't want to keep finding new ways to subsidize the housing market. And that's all Bill Gross is doing. And I think it's all disingenuous. He is a big holder of these bonds. He knows without government guarantees, the value of these mortgages is going to collapse. He's going to lose money. His investors are going to lose money. And so he uses his clout to try to advance this agenda. And he tries to disguise it as legitimate economic advice. It is not. He is talking his book. It's all self-serving rhetoric that we need to reject. You know, one other thing I want to speak about in this video blog, just in case anybody was thinking about that, I learned today that the IPO for Government Motors or General Motors has now been filed, and so they're going to be selling shares of Government Motors to the public. The shares are going to be with the symbol GM again. They'll be traded, I guess, in the U.S. and in Canada. My advice to everybody listening is do not buy this IPO. I am convinced that General Motors will go bankrupt again. It doesn't mean that there can't be some kind of short-term bounce in this stock if people decide to buy it for whatever reason. Who knows? I mean, once it goes public, it could go up, it could go down. I'm not trying to guess what the short-term direction of General Motors is going to be. Long-term, I think it's clear the company is going to fail again. I think the government prevented a meaningful restructuring. We didn't have a legitimate bankruptcy. They've preserved an inefficient, unproductive company. They've been able to goose their revenues recently because of cash for clunkers, because of artificially low interest rates, and other government subsidies to consumer credit and to automobile loans that has enabled them to pad their revenues just in time for this IPO. Remember, of course, the government is unloading these shares, so the government is trying to get the best price possible, so they're trying to help General Motors pad their earnings, but long-term, nothing has changed. This company is sick. I think it is going to fail again, and if it does, again, the bailout is not going to help the shareholders or the bondholders. It's going to help the labor unions who really run this company. It is not being run for the benefit of the shareholders. They're not trying to make cars at a profit. They're trying to run the company for the benefit of labor, for the labor unions, and anybody who buys this stock, you know, is a sucker. Anyway, that's my word of advice. Stay away from the General Motors IPO. Take care, everybody. So long.